Welcome! In this video, we will discuss how to establish and repair credit. My name is Mackenzie at First Commonwealth Bank, where it is our mission to improve the financial lives of our neighbors and their businesses. Establishing and repairing credit isn't a quick process, but starting today gets you one day closer to better credit. There are many companies out there that will offer to help with your credit score. Read reviews and Google the company's name with the word fraud or complaint to see if there were any negative reports about them. You can also check the Better Business Bureau site for any complaints filed with them. In fact, many of the things that those companies offer for a fee, you can do for yourself for free. Let's take a look at what those are. To repair your credit, you need to fix what is causing your current lower score. Being able to pay debt back on time and paying down high balances accounts for 65% of your FICO score. So let's review how to deal with those issues. To repair your credit, you have to take a close look at your current budget. Exactly how much money do you have coming in? And how much are you spending? Ideally, you need enough money in your budget to do 3 things consistently each and every month. 1. Make your debt payments on time. 2. Have enough money to pay more than just the minimum debt payments. And 3. Have enough money to save for an emergency. The ability to pay your debt on time each month accounts for 35% of your FICO credit score, so it is the most important thing you can do to repair your credit. Paying down high balances on loans, and especially credit cards, accounts for 30% of your score, so it's a close second. Having money set aside for future emergencies will mean that you do not have to fall back on charging your credit card up again if you need to do something like pay for an unexpected car repair. If you find it hard to do these 3 things consistently each month, you might have to increase your income or cut back expenses. Be sure to check out our budgeting and savings videos for tips to get started. Making at least the minimum or regular payments on time each month is key. However, if you are in a position to pay extra on any of your credit cards or loans, you should prioritize paying down high balances on revolving debt like credit cards. You should strive to keep your credit utilization below 30%. This means if you are carrying a balance on a credit card that has a $1,000 credit limit, that balance should not be more than $300. For example, if you have 2 credit cards, each with a credit limit of $1,000, and you owe $800 on one card and $200 on the other, you should keep making your minimum payments on the $200 card and make those extra payments for more than the minimum payment on the $800 credit card. The exception to this suggestion would be if one card has a much higher interest rate than the other. In that case, it might make the most sense to pay off the one with the high interest rate first. Review your credit report to see if there are any accounts that were turned over to a collection agency that you might not be aware of, or that you may have forgotten. Typically, an account can get turned over to a collection agency if no payments are made on it for more than 90 days. Sometimes that can happen because someone doesn't have the money to pay for it. But it can also be a result of something as simple as an outdated address. If a hospital sends a bill to a previous address, you might not be aware of it at all if that does not get forwarded to you. So if there is anything that has been turned over to a collection agency, work with that collection agency to come up with a payment plan to pay it back. Considering how important it is to pay down high balances on existing debt, It will help your score if you commit to not taking out new debt for fun stuff. If you work hard to pay down a credit card and then simply use it to pay for a vacation as soon as you have available credit, you will be in the same spot as you were before. Instead, continue to monitor and cut back on expenses so that you have some money to save towards fun goals each month. That'll also help to have funds available in case of an emergency. Let's talk about how to establish credit if you have never had it before. We already mentioned how important paying your debt on time is, so it's a good idea to get in the habit of paying all of your bills on time, including things like rent and utility bills. Even though utility bills are not loans that are being paid back, if you don't pay them on time, you might be subject to late fees. If you go more than 90 days without paying your bills, they might be turned over to a collection agency, and that will hurt your credit. If someone does not have an established credit history, they might benefit from using a secured credit card. To use a secured credit card, you will need to save up money that will be kept in a special savings account. The way that it works is that your money is placed in a savings account where you will earn interest, but you will not be able to make withdrawals from it as long as you have your secured card. So if you have $500 in your savings account, you will have a credit card with a $500 limit. You then use that card, and at the end of the month, you get a bill that you pay with the money that does not come from the savings account. The $500 will stay in the bank as you use and pay back your secured card. If you get to a point where you cannot pay your credit card bill at all, the bank then has the right to take the money from your savings account to pay the bill. This means the risk to the bank of losing money is low, so they are more likely to offer this type of credit card to someone without an established credit history. Not all banks and credit card companies offer secured cards. First Commonwealth has a secured card that can be opened with credit limits ranging from $300 to $5,000 with a corresponding security deposit. This type of credit card can also be a tool to help with repairing credit. Some banks, like First Commonwealth, also offer secured loans, where the loan is secured by something like a certificate of deposit, or CD. The way that this works is that you will open a CD where your money will earn interest, and then you are approved for a loan in the amount of the CD. You will make regular, on-time monthly payments and pay back the amount you borrowed. Once the loan is paid back, you will have access to the money in your CD, in addition to the interest you earned. But more importantly, you will have added many months or even years of positive credit behaviors to your credit report with those on-time payments. A very common way to establish credit is to get someone with good credit to be a cosigner, on a loan with you, or open a credit card with you. If they are a cosigner on a loan or credit card for you, it means that you are responsible for making the payments. But if you don't, they have to pay it. If you are late making payments or miss payments altogether, it'll hurt their credit. So it is a big responsibility if someone is on a loan or credit card for you. It takes time and dedication to establish or repair your credit. But the sooner you start, the sooner you will see progress. You don't have to tackle everything at once and can write out a list of what you want to do to help your credit. This will help keep you on track, and it will also let you see the progress you are making as you cross items off your list. Also, check out our Credit Myths video for some common misperceptions about credit. Thank you so much for joining us today. To give us feedback on this video and to be entered to win a great prize, Please take a quick survey by scanning the QR code or visiting the site listed on the screen.